We welcome all the participants in this important program on the intricacies in the audit report as per Form 10B and 10BB, including the Form ITR 7. It would be taken up by CA Anil Sathe sir and CA Ashok Mehta sir. It is a very important and relevant topic at this point in time, wherein these all new forms are introduced, and we feel there are various complex cities involved in this topic. We understand that CTC has also made a representation to the CBDT for extension for all these formalities, and Mr. Sathe and Mr. Mehta would throw some more light on it. So with that, I'll ask Richa Chawla to introduce the speakers.
Good evening, everyone. We are honored to present Mr. Anil Jayan Sathe, a distinguished professional in the field of chartered accountancy and taxation. With a remarkable career spanning several prestigious roles and accomplishments, Mr. Sathe has made significant contributions to the profession and has been a guiding force for many aspiring professionals. In past, he has served as the president of Bombay Chartered Accountant Society and as the esteemed editor of the Bombay Chartered Accountant Journal, and currently serving as the co-chairman of the Taxation Committee. He is an accomplished author and has graced the pages of prestigious journals like Bombay Chartered Accountants, The Chartered Accountant, and Income Tax Review, as well as popular magazines like Economic Times, Intelligent Investor, and Outlook Money. He is also a co-author of publications such as Issue on New Scheme of Taxation of Firms and Voluntary Disclosure of Income Scheme 1997. He has shared his wisdom as a guest lecturer at esteemed institutions like ICAI, Bombay Chartered Accountant Society, and CTC, and Jamnalal Bajaj Institute of Management Studies, enriching the learning experiences of future leaders. He actively contributed to the community as a panel member of the Charitable Trust Clinic conducted by the Bombay Chartered Accountant Society, showcasing his dedication to giving back. We are truly honored to have you as our guest, sir. Thank you very much for joining us today. We would also like to introduce Mr. Ashok Mehta, a distinguished chartered accountant and a member of ICWI, with the added distinction of completing his LLB in 2018. Mr. Mehta's commitment to his profession shines through his role as the former chairman of the Direct Tax Committee at the Chamber of Tax Consultants. Currently, he holds the prestigious position of chairman of the Research and Publication Committee at the Chamber of Tax Consultants and serves as a managing committee member of AIFTP, solidifying his influence in shaping the future of tax consulting. He has also presented papers at conferences hosted by WIRC and CTC and shared his insights through articles in esteemed publications like Chamber and AIFTP Journal. His dedication to knowledge dissemination doesn't stop here. He has also served as the convener of the Mumbai Central CP Study Circle of WIRC, a part-time lecturer at Sindham College of Commerce and Economics, and visiting faculty member at both the Institute of Distance Education, Mumbai University, and the Sindham Institute of Management. With a track record of active participation in various committees related to tax consulting, Mr. Mehta's expertise is well-rounded and invaluable. Thank you very much, sir, for joining us today. Over to you, sir.
Yeah. Sathe sir, will you share these?
Yes. I'm doing that. Okay. Desktop good. Desktop. So. और मारा चैनल सेल पे ना तो बस सेल तो है ऑलरेडी हाँ Good evening, friends. Good evening. I've just shared the screen with you. I hope it is visible to all. What we plan is in the next around 40 minutes. I will try in 35 to 40 minutes. I'll take you through this particular presentation, which is primarily on 10B, 10BB. And thereafter, we will And thereafter, we will have Mr. Ashok Mehta speak on primarily ITR 7. He's been kind enough to add to this my presentation the slides on ITR 7, which though I will be referring to, those I will refer to very, very briefly and not get into the details or the nitty-gritties, because that will primarily be dealt with by Ashok ji.
Sir, extremely sorry, sir. Before you start, I'm late in joining, sir.
No problem. No problem. No.
And you can, I was in the court here itself here, and my matter has just finished right now here. So I'm extremely sorry. And as a chairman of the Delhi chapter, I really welcome Anil Sathe sir and Ashok Mehta sir as a speaker of the very interesting topic. And I could not resist myself spending a single minutes here. I just turned off and just came and I started joining here. I thought that I should not miss any part of your session, sir. And I'm really lucky, sir, that I have not missed here, sir.
We will have the pleasure of your company for the entire session now.
Yes, sir.
So as I said, what we'll do is that in the first 40 minutes of my presentation, 35 minutes of my presentation, I'll deal with this particular PPT. Then Ashokji will supplement me on whatever I have left off and take or deal with primarily ITR 7. And then we have drafted between us around 20 to 23 questions, which will be shared between both of us. We will answer those questions that we hope will answer most of your queries. And then if possible, we will leave some time for, the balance questions from the floor, if possible. So this is as far as this is concerned. The topic for the day is the Form 10B, 10BB. Those were notified in February 2023. And the primary purpose seems to be virtually collect all data that is necessary for the purposes of assessment. In fact, in our sessions which we had prior to this program, we felt that today that form is so exhaustive that it virtually leaves nothing for an assessing officer to do. Over the last decade or so, I have had a fair experience in charitable entities. And I found that over the last 10 years or so, what is happening is that the attitude of the lawmakers toward charitable trusts has undergone a change, in the sense, earlier, when around 20 years ago, we were treated with benevolence, indulgence. Now we are treated with suspicion. I think the wheel has turned the whole hog. That is the reason why you see these sort of amendment. And I find it really rather appalling that this is happening to charitable trusts who in fact supplement the government effort to reach the most downtrodden positions of society. So it's rather unfair, but ultimately as professionals, we have to live with what we get. So as I said, the form was notified on February 2023. You have two forms, 10B and 10BB, dealt with by Rule 16CC and 17B. What it does is that in regard to charitable trusts or entities where the total income is less than 5 crores without applying the exemption under 1023C or 11, you have to file your audit report in Form 10BB, where there is a total income in excess of 5 crores, then you have to file Form 10B. So these are primarily the two different forms. 10BB, I will call a subset of 10B. And before I go to the form itself, I must point out that the attitude that one needs to have while filing the audit report is that we need to comply with the regulation rather than making any converted attempt to avoid reporting. Right since the time that this form came on the anvil, I've got number of clients and number of chartered accountants who ask me, इसमें report नहीं किया तो क्या होगा, क्या चलेगा? So that to my mind is not the proper, shall we say, response. Yes, we undoubtedly have to protect the interest of the charitable trusts, which is a genuine interest, and see that they are not caused any harm. But at the same time, according to me, there should not be an attitude that you don't report. I think that's important. The first significant change in Form 10B as it stood earlier and now is that earlier there was no assertion as to the correctness of the particulars. That has come in for the first time in this form. So therefore, there is two-part reporting. One is a true and fair view and a certification of the correctness of the particulars, true and correct, subject to, of course, whatever observations and modifications that one may need to go through.
साठे साहब just इसको full mode पर कर लेंगे सब presentation
Okay,
mode पर.
okay. 1 second. Full mode लगाना.
So fourth button below, next to the notes.
Yeah.
Fourth button.
Yes.
Okay, हे वर गया ना. Okay. So हे का नाही झालं ते. कुठलं झालंय? Okay. As I said, the whole now requirement is that you have to certify both the true and fair view as well as the true and correctness of the particulars. Then in the second slide, you have a description of Form 9A, Form 10, Form 10B, Form 10B, and a synopsis, which are the slides which have been added by Ashokji. I will not deal with them at depth. He's given in the next slide the final due dates for the particular forms 9A, 10, 10B. As is known by virtue of the circular, which came in May 2023, the earlier dates were that you had to file these forms by 31st August. Now you are entitled to file them at any point of time before the due date of the return. And even if you do that, then also you will not lose the benefit of the explanation to section 11, or for that matter, the accumulation under 11.2. But practically speaking, your decision in regard to 9A and or regard to the explanation to section 11.1 and the accumulation under 11.2 will have to be completed by 30th September, because as of now, the due date of uploading the Form 10B has not been extended. Now 10B requires you to communicate to the assessing officer your 9A accumulation under section explanation to section 11.1 as well as 11.2. So virtually, though you have the relaxation till 31st October, you will have to take the decision prior thereto by 30th September itself. As far as Annexure 10B and 10, the two forms are concerned, 10B has 49 clauses and a huge number of schedules. As Ashokji has rightly said, it virtually gives the entire return in ITR 7 to be certified by chartered accountants. So our task has become extremely onerous. And compared to the earlier Form 10B, which had only 8 clauses, we have a huge number of forms right now, huge number of clauses to which we need to report on. So, as I said, in our office, we have communicated around a couple of months ago that our professional fees for this audit will stand, increased by, in some cases, by a multiple and not only a normal increase of 5 or 10 or 15%. For this reason, We have faced all the flack as is normal in all these situations, but we have tried to explain to our clients that we can't help this. If this has to be adequately reported, this is where we are. As this is a tabulation of the number of clauses and number of schedules 49 and 29 in 10B and 10BB 32 and 6. Common clauses he has listed between, I need not get into it. This can be of part of your sort of collection for referral at a later point of time. The next is the the basic details in Form 10B and the schedule in the ITR. So what Ashokji has pointed out is that virtually what you are reporting now here is also being reported in ITR itself. So at the stage of the audit report, you are virtually as ITR is being updated. Common clauses in Form 10B and ITR 7, again, there is a continuation of this. Additional clauses in Form 10B and not in Form 10BB is, of course, Clause 15 is advancement of general public utility. Now, after ORDA, as we call it, the Supreme Court ruling, this is one of the most, shall we say, drastic clauses which we will have to deal with because based on this, the proviso to 215 will operate, and once the proviso to 215 operates, you will have everything that is, there in that situation. As far as application of income is concerned, he has again listed the application of income, and very surprisingly, the application has to be designated or has to be bifurcated between various clauses. And the last clause is application which cannot be specifically categorized under 1 to 8. Now, it is here where one needs to be reasonably careful about reporting. Ashokji will deal with this possibly at a greater length. The reason being that the reporting should not result in a impression to the assessing officer that this application is not on objects, because you will have a large number of basically administrative expenses which are incurred for the purpose of carrying out the objects of the trust, but they cannot be definitely allocated to any one of the objects. So in that scenario, I think it needs to be, this needs a little more careful reporting. Extract of note to Form 10B, I need not get into it at this stage. Here he has given an example of a trust having a 7.25 crore income and what would happen in case of an accumulation under 11.2, expenditure of 7 crores, so on. I will leave this part of it for him to deal with when he comes to his presentation. Then he has given in detail, as I said, the establishment expenses, how they are incurred and so on and so forth. A very well structured presentation, and for those who are going to file ITR 7, I think this will be of great use. Application of income to be reported in 10B clause 31. What is in electronic mode, what is other than electronic mode? So basically something which is not capable of verification, that is what they want to be reported, so that if the assessing officer so chooses, he can, deal with it in depth. Application of income, again 31 clause, as I said, I'll not deal with this in depth. Yes. Now we'll come to the presentation which I had prepared. The earlier part of the presentation, Ashokji, bear me out, Ashokji will take it, but I will leave it to him because that is predominantly on the nitty-gritties of the form and ITR 7. Clause 11 and 12 requires you to let the assessing officer know about the objects of the trust and modification of the objects. Remember, the clause requires you to list all the objects to in the which are contained in your trust deed, and this could be some cause for concern, for the simple reason that, as I said, there could be a situation where whether a particular clause falls within the relief of poor or it does not fall within the relief of poor is something which one really needs to understand. So therefore, to my mind, this sort of classification is going to create various controversies. Also, in regard to the the first 5 limbs of 215. Now, the law is crystal clear that if your objects fall within the first 5 limbs, then in that scenario, the provisions of the proviso do not apply. Now, undoubtedly in 1023C in noble education, the Supreme Court deal with what in its view was the definition of education. But does it really stop there? There is a case to urge that, according to me, Supreme Court was dealing with an entity or a trust which was engaged solely into education. So while interpreting solely, it then dwelt upon education and possibly then came to the conclusions that it did. Of course, it's a Supreme Court ruling. So as of now, at least, unless it is reviewed at some point of time, one will have to live with it and say that, yes, as far as education is concerned, we are going to be restricted to scholastic education and nothing more. Clause 13 contains information about commencement of activities, whether activities have commenced during the year, because when the new registrations came in, the principle was that, yes, you had either a provisional registration, or if you had been registered earlier, then there was a permanent registration. And within a period of 6 months from the commencement of those activities, of your trust, you would have to apply for a permanent registration. The question that is often put to me is, what are commencement of activities? Now, it could be a matter of serious debate. To my mind, commencement of activities does not necessarily mean that you have received a donation or you have made any expenditure. That would certainly be strong corroborative proof of your having commenced activities. But having said that, if you are able to establish that, for example, you are wanting to start a particular, say, old age home, you have applied to the collector for allotment of land. So your activity of applying for allotment of land, to my mind, is commencement of activity. It need not necessarily be determined by receipts and expenditure. So why I'm suggesting this is that rather than wait, if you are able to establish that the activities of commencement have commenced, it makes sense to apply for a permanent registration, because then that would be for a period of 5 years. Clause 14. This clause deals with books of account and other documents to be maintained by the trust. According to me, this is a very, very important clause. The reason being that earlier you were required by 12A1 subclause B to carry out an audit. Now the law envisages prescription of books in terms of Rule 17AA, which is now a condition of the registration. Remember, there is a distinction between infringing a particular provision which will circumscribe your exemption, but Section 12 begins with the condition that nothing in Section 11 will apply unless the following conditions are satisfied. And therefore, maintenance of books of accounts as prescribed in 17AA is one of the conditions. It is a condition of the exemption, and that is where the real difference arises. Earlier, you were required to maintain books as long as the auditor was satisfied that your affairs could be verified on the basis of the books of account that you maintained. You did not fall foul of the law. Now, today, you have to establish that you have maintained the books of account as prescribed by 17AA, and this is something which I think could be of some degree of concern. Now, whether maintained at the registered office or in any other place, here, particularly for auditors, in your engagement letter, as well as your what we call popularly the MRL, you will need to take a representation from the auditee, the trustees, etc., that that this particular, clause has been complied with. The reason being that you as an auditor have to certify that the particulars are true and correct. So if you are verifying that the books and record are maintained at a particular place, then they had better be at that place. I'm saying this because out of experience that we have seen various situations that a large number of entities gets their account compiled by a professional. More often than not, the records are maintained by the chartered accountant himself. If that is the proposition, and of course it cannot be the same chartered accountant who audits the books, because clearly he is barred in doing that, but assume for a moment that it is another professional, then where is his office if the books of accounts are maintained there? All these aspects are important, and though it often arises only in search cases or things of that sort, I think one needs to be extremely careful in this regard. If the books of account are going to be maintained at a different place, then of course, then of course there will be a resolution which has to be passed, and the intimation has to go to the jurisdictional officer. A question that often crops up in our discussions is that suppose those books are actually not maintained in the register of it but elsewhere, but the resolution has not been passed. The auditor would do well to get that resolution passed and furnished to the AO before they sign off the report, because otherwise you will be saying something which is not correct. I think that's something which are important. And the last bullet point is effect of not maintaining prescribed books of account. Here it's possible because the books are reasonably exhaustive, calling for a significant part of details which are relating to the past. So it is possible that some part of the data may not be available with the trust. I would take a view that if you are auditing the books of a particular financial year and you are commenting on the true and fair view of that year, as long as the aberration of not maintaining some record is not significant enough for you to limit your verification, or it does not amount to a scope limitation, I would take a view that yes, certainly you can go ahead and observe in your observation of your audit report that these particular books of account, though prescribed, or these records, though prescribed, have not been maintained. To my mind, that itself should not vitiate the exemption, as long as the otherwise from the books of account, the affairs of the trust can be reasonably well culled out and verified. Clauses 15 to 18, the auditor has to certify whether the proviso to 215 applies. Receipts from business. Here we are dealing with two types of positions. One is receipts of business of where a business undertaking is settled on a trust. That is 11.4. Those situations today are few and far in between. You don't have, it was a time in the old Birla situations where they used to settle factories themselves on trusts. And then in that situation, they would say that, all right, I have settled this business undertaking on the trust. The income thereof will be utilized by the trust. That is an 11.4 situation. The second type of situation is whether business is incidental to the objects and whether separate books of accounts are maintained. Now, this is something, and we have dealt with this at a subsequent question, but this could be a moot point as to whether the separate books of account have been maintained or not. Because if you are not maintaining separate books of account, there may be a problem that the trust will face. Condition of 11.4a is not satisfied, and if 11.4a is not satisfied, it may lead to a significant amount of taxation in the hands of the trust. So we will deal with this at length in one of the questions which we have raised. So I'll not deal with this at this stage in depth, but suffice it to remember all of you that separate books of account, remember, separate books of account, which means books of account distinct from what are relating to the other activities of the trust. So if an activity amounts to trade, commerce, or business, the proviso getting attracted, then that particular activity has to be accounted for separately. Reporting of receipts of trust on which TDS is deducted under C, J, and they have also included H. I was really wondering as to how H could apply, because H primarily deals with commission, but there may be rare situations where you have a receipt of the trust to which H applies. As Ashokji mentioned in one of our interactions, virtually what they are asking you to do is reconcile all the income of the trust which is sought to be applied with the 26 AS in totality.
Yes.
So refer and reconcile annual information statement and taxpayer information. So apart from carrying out an audit, you are now virtually required to do much more. And that is what I find, doing this when I discuss, and I will say this because I discussed this with some very, very large business organizations also. Business organizations where businessmen are, members. So those trade associations, when we mention it to them, they say, "अरे ये detail तो हमारा हम कैसे करेंगे इसको?" The reason is they have not up to now been geared up to handle all this. This is why these clauses, and what will happen is we are dealing with an animal what we call the dreaded CPC. If there is a difference, what is CPC going to do? It is simply going to add this as income, say that it is not applied, and all the consequences will flow. Voluntary contribution received by trust. Here, virtually, what they are doing is they are wanting you to reconcile your books with the 10BD which you have filed. Everything here, including your FCA ARA return, has to be reconciled with your books of account and Form 10BD, and then the total has to match. That is precisely what they are attempting to do. I think a very, very difficult task. I'll just mention one point here. There often seems to be an impression that if a particular donation is not mentioned in 10BD, it is sacrilege because it is not mentioned because that particular unique identification or the ID is not there. What is the consequence of that donation in being not being included in 10BD is that the donor will not get deduction. It does not fall foul of an exemption under Section 11. So I don't see any problem on that score. Yes, your books of account with your 10BD is something which you will have to realize, or rather reconcile. Details of application of income or donation to any other person. Now, 31(1) is income applied within India. Application for each object is to be shown separately. Application which cannot be specifically categorized under the 8 object is to be shown separately. But as I said here, it is better to put in your observations, and the utility permits you to attach your entire detailed report to your report which you will upload online. To my mind, your observations are going to be of extreme importance for you to protect yourself, because as an auditor, and this is what happens every day that happens. I remember in those good old days, I mentioned to Ashokji and Prakashji, in the good old days, I used to audit Siddhivinayak. And everybody used to say कि साढ़े साहब आप fee बहुत लगाते हो, we are तो charitable. I used to tell them that, look, you may be doing charity, but I don't do charity. This is my bread and butter. So if I give you a service, and I used to give them an example, I used to say that in your trustees meeting, आप नीचे से वड़ा मंगाते हो, तो वड़े वाले को तो आप full price देते ही हो ना. So you give a professional his full price and then demand service. To pay him less because it is a charitable trust is not something which, yes, if I agree with the charitable objects of that entity, I will donate myself. That's a different matter. But that is post received of my valid fees. This is what my thinking is. And I tell this every day to every trustee that please pay a professional his due. What he earns is hard-earned money. Clause 31.
I totally agree with you, sir.
Clause,
totally
yes,
agree with you, sir.
Yes. Clause 31(2), application of income result in payments in excess of rupees 50 lakhs in previous year to any person. Now, my juniors were asking me when we analyzed the form in my office, why is this sum of 50 lakhs being mentioned? Remember, the government does not do anything without a thought process. The point is, if you have claimed an application of 50 lakhs and the recipient has not declared that sort of income, you all know that under the current reopening provisions, with 50 lakh rupees of income escaping, they can go back 10 years. That is the reason for this threshold of 50 lakhs. It has not come idly just like that. It's a thought process that once you give these details, if for 1 year there is 50 lakhs escaping, that will then form a basis for earlier years. In fact, I was with a commissioner. They said that what will happen is once you report here, we will issue 133(6), ask for details of earlier years, और उन्होंने declare नहीं किया है, तो then we will reopen the assessment of that person all through. This is the thought process. Remember, what you are going to write is going to be extremely important and material, and it is going to have serious consequences. Amount which is not actively paid, not actually paid. This, of course, comes out of the explanation below 11.7, that today you are entitled to application of income only if it has been actually paid. It's relevant for a trust following mercantile system, but by and large, as I said, virtually all trusts do follow mercantile system. So mercantile system, the major trusts follow. Smaller trusts would be on cash basis. Here, my grievance is only this, that like 43B, they ought to have given an extension in regard to, up to the due date of return, which they have not done. Their claim is that you can always go for 9A. But 9A in itself, as I said, has its own limitations. Bifurcation into revenue and capital expenditure is what they are asking for. Amount invested or deposited back. I am aware that I am rushing, through with this. The reason being that we are talking in a capsule. If it's a exhaustive seminar, we normally take around either an entire half-day session or a full session of 1 day to discuss each and every clause. We don't have that liberty today. So I'm rushing through. Amount invested or deposited back in corpus during the previous year, applied during preceding years. We all know the provisions of law. Rebate or loan or borrowing also. Amount to be disallowed. Amount disallowable is 30% of amount paid to a resident without deduction. Here, of course, no disclosure is required if the tax is deducted and paid in subsequent year and the amount is claimed as an application in the subsequent year, then no reporting will be required here. 3110, of course, is 10,048.3. Donation to another trust towards corpus. This is for the proposition that now you cannot donate towards a corpus after 2018. That is not treated as application. So therefore, if you have donated towards corpus, they want that information. Donation towards trust not having same objects. To my mind, here, I would take a view when you take same objects. It's like this, that if what I donate is within my objects, or the other trust is carrying out objects which those objects permit me to donate to that trust, then even if the objects are not same, because the word same would denote identical, I don't think that's the purpose. And remember, when we are interpreting a form or a rule, what we are doing is virtually we are interpreting delegated legislation. And if we are interpreting delegated legislation, you must have the liberty of having a purposive interpretation. To my mind, the purpose is that your donation fits within your objects, for which it is to be utilized by that trust also fits within its objects, and that to my mind is sufficient. Identical objects are not required. Does donor have power to trust it to donate? This I already mentioned. Application outside India, application for any purpose other than application outside India, we will deal with again in those question answer. Similarly, application for any purpose other than the objects of the trust also, I recall that there is a question frame, so I'll not deal with it at this stage. Amount for which option is exercised 11.1, verify form 9A to 31st August, relaxation up to 31st October. Amount accumulated under 11.2. Here, of course, I would draw or make one observation. I often find that people are still in that old, where what they are doing is that they are saying 11.2 accumulated for the objects of the trust. That the law is now virtually frowning upon. They are saying that you have to specify a particular object. So therefore, it is not sufficient for you to simply say that all the objects of the trust. You have to give a specific purpose. That seems to be the tenor of jurisprudence today. So be careful about 11.2. Just don't mention the general part of it. 37, application of income from certain sources. So what they're saying is, because section 11 is the only section, as I said, which grants an exemption on the basis of application. So virtually what you are required to do is give a fund flow. So therefore, if you are applying your income, applying or spending out of something which is not this year's income, that is what they want to identify. Long and short of it is, for this, that is the purpose of this. And it is correct to my mind also, for the simple reason that ultimately people used to come to me in those good old days. They used to call 1A a standard deduction. We had those classic cases where 100 rupees income, 15% standard deduction, 85. I spent 95 to 10 rupees deficit. That was the calculation that used to go through, which is not the correct proposition of law. So therefore, according to me, what they are trying to say is that if you have income of 100 this year, you cannot spend anything more than 100. If you actually do, you're dipping into your kitty of the past. That is what you have to establish by this particular clauses. Payment credit in excess of 50 lakhs to a single person, as I said, no need to deal with this. 42, details of transaction with specified person. Transactions are listed in 13.2. Here, as I said, difficulty in specified person and verifying the transaction is going to be a problem, because you require a large catena of people with their relatives, and the definition of relatives in section 13 is fairly wide. So you require that. In fact, I was discussing this with 3 days ago with a very high profile industrialist. And he said, okay, my brother is a trustee, but I don't know whether he will give details of all his concern. I said, then I will have to put a scope limitation, because if he doesn't give information, then I don't have that information. I'll have to put that scope limitation, which may result in some other inquiry. That's a different matter altogether. But this is one part of it. Secondly, a specified person is one who has donated up to the end of this particular period, end of the financial year, more than 50,000 rupees. So to my mind, it's such an abysmally low sum that many people will be covered here, and it is impossible for you to really ascertain this. But I think you will have to give a scope limitation here. Reporting is required by depreciation is claimed. This is, I think, is obvious after 11.6. If you have claimed something as an application of capital object, you don't get depreciation.
Sir, just one query, sir.
Yes.
How we can give the scope limitation, sir? In the form?
No, in the form, in the observations,
Yeah.
when you say particulars are true and correct, you will say that the auditee has not provided this data.
Okay.
If the point is that if we have come across this, if you have some suspicion that the payment is to a person which is likely to vitiate section 13, then we do that observation also, that we don't know, no information has come forth. So that is something which Ashok ji may develop on it, because he seems to have some view. Anyway, so schedule corpus requires that corpus is separately identifiable and kept invested in permissible notes. Here, what we have done in my office is that we have classified or segregated the balance sheet up to 31st March 2021, because up to that point of time, there was no mandate. So 21 की balance sheet हमने freeze की है, और 21, 22 और 22, 23 में जो corpus donations लिए हैं, that we have ensured that they are identified in some particular investment. We have also requested the trust to pass a resolution to say that मान लो 50 लाख की FD है और आपने in 2 years 10 lakhs and 20 lakhs आए हैं, so out of that 50 lakhs 30 lakhs is earmarked towards this particular. That is what we have done. It's a piecemeal solution, but you have no option. So that is what we have done. We have taken a view that the limitation does not, or the restriction does not apply to prior to 2021. Scheduled TDS disallowance, again, no major thing to talk about. This is about L. I have exceeded my time for around 7 minutes or 8 minutes. I will leave the floor to Ashok ji, because he also has a long journey to travel, before we take up the question answers. Right, Ashok ji, over to you.
Yeah. Sir, can
Yes.
you stop sharing so that I can?
Yes, yes.
Yeah,
I'll
sure.
stop sharing.
Yeah.
Sorry, Ashok ji, I took 8-10 minutes
No,
more.
not at all. Not
No
at all.
issue, no issue, no issue.
So with regard to that issue about the related person, there is one old circular of 143 dated 20th August.
Correct, correct,
And
correct.
the department seems to say that if you take a list certified by them, then from the this thing, that is only thing which is required to be done by the auditor. However, there needs to be a word of caution that you need to put that note of limitation, as sir is saying, limitation of scope, and also the fact that in the year in which you are doing the audit, if there is someone who has paid more than 50,000, how can you avoid reporting that particular person is something which you cannot this thing. One sec, I've shared the wrong file once. Just a second. Just a second, please bear with me.
वो 42 slides वाली है मेरे ख्याल से.
Yeah, sir. I don't know. I'm also technologically not very great with the technology. Yeah.
Yeah, that's it. That's it.
Yeah.
Yes.
So this ITR 7 is a different ball game. Okay. So you need to know 11 to 13 and all the relevant clauses to fill up this. If you've not filled it up before, you need to be very careful what you fill up. With your 10B and BB, you are practically certifying every figure in your ITR 7. Every figure which you fill up has to cross tally. Now, it's a myth that ITR 7 is being filed by the trust. In 99% of the cases, the chartered accountant or the lawyer is filling up the ITR 7 also and the 10B and 10BB. Maybe two different lawyers or two different chartered accountants. However, there is a complete cross tally for all the figures. The ITR 7 is also for trust which are into business and trust which are doing share transaction of real estate trusts are also covered. So they are also supposed to file this. So these are the schedules for charitable trust. You need to fill up these charitable trust schedules. You don't have to fill up the house property, income from other sources, capital gains, business income. Those schedules are not for charitable trust. You don't have to fill it up. Any figure which you put over there creates double addition. So and 143(1) and a litigation which will be long and tiresome. And therefore, you need to fill up only these schedules which are listed over here. Schedule I, Schedule IA, IA giving details of accumulation, IA giving accumulation taxed in earlier years, D, DA. We'll go through these schedules as we go ahead. So this is the basics of your ITR, which general information, which is similar to your 10B. Details of projects and institution. There is a question in one of the 23 questions, so I'll not dwell upon this. Similarly, general information. This is majority of the information which you are giving over here is already certified by you in 10B. One should be careful that you do not fill up half informations in 10B and fill up more information over here, because it amounts to not doing the audit properly. If you have shares received in kind, those need to be listed over here. General information, proviso to 215. This is the most onerous responsibility of the chartered accountant, as already discussed by sir. here you need to decide whether the trust is doing any business or not, and if that business is in the furtherance of the charitable objects, and then give details over here. This A23 schedule is similar to clause 15 and 16 of Form 10B. Similarly, A24 is on the same lines as clause 12 of 10B, and hence one should see that the data should match. A26 corresponds to clause 20 of 10B, whether 1310 is applicable or not. So all these three schedules, there is a direct link between these schedules and over here. What I have done is for each schedule, I have listed the clauses of 10B so that it is easier to understand and go about. So, yeah. This slide, of course, there is no correlation to your slide, but only thing in one of I have got 3 appeals where the trusts have not filed the audit details, and because of that, the return is taken as delayed and Section 11 is not granted. Now, you need to be very careful that details are filled up. You are entitled to 31st October extended date only if details of audit are filed in this. Otherwise, automatically 143(1) will create a demand on and denying you Section 11. Details of trustee at any time during the year. So even if the trustee is for a few days or a few months, you need to mention the name of the trustees and give details over here. This is similar to clause 10 of your 10B. Same clause. The information is also on the same lines. We have a question with regard to this in the question answer, so I'll not dwell too much on this. Related party details as per 13.3. Sir has already discussed that the difficulty in giving this list and the need to reduce the scope when you do it. This is as per similar to clause 4 of your 10B. Schedule I, amount of accumulated 11.2. Now this schedule, the matter in red is the 2 columns which have been added. Now these 2 columns, they have bifurcated that into application for objects for which you have set aside that accumulation, and expenditure for objects for which you have not set aside. So you as auditor are going to certify in Form 10B Schedule AC that whether the expenditure from the accumulation is for the object for which the trust has set aside. So you need to take the past resolutions which are passed and compare that and give a finding to the effect that whether it will fall in which column, column 8 or column 9. Now, anything which is not spent and which comes over here in last 11.3 clause 15, column 15, this will go to 115 BBI schedule, from where it will be taxed at 30%. Now, 115 BBI, there's a separate schedule. We'll be discussing it after a few slides. Going ahead, Schedule IA, this is a new schedule brought in. If there is any tax paid under 11.3 in the last 5 years, you need to, as auditor, certify that in Schedule ACA in Form 10B. And you need to also give the information over here. If you are the auditor for the first time or not being auditor for the last 5 years, you will have to put a note that you have relied on the earlier auditor's details and the forms filed by the trust. You do not have the time to do the audit of all those figures and whether the tax is paid or not. A general note would protect you to a certain extent unless there is a gross error in reading the facts.
But they will be prone to inquiry, sir.
Yes, yes. Chartered accountant is going to be the fall guy if there is anything wrong with any of these trust, this thing, you know. And God forbid, if the trust is held up for money laundering, they'll arrest you 100%.
Yeah.
So whether there is actual money laundering or not is a secondary question altogether. So Schedule D, details of deemed application of income under 11, clause 2, 11, explanation 1 of 11.1, Form 9A. Here also they've added a new column: out of deemed application, claimed amount required to be applied. So this is a new column added. This is certified by you in Schedule DI in Form 10B. So therefore, the information has to match. And the column 8 will directly go to part B of the computation. When I do the computation, part B is there. After a few slides, I'll show you how the schedule DA is a new entrant to the form. It gives you are required to certify this in the schedule DA of form 10B. And you also need to look at the past 5 years, what is taxed by the trust, offered for tax, and fill these details over here. The column 5 of schedule in schedule D should tally with the figures in these columns because they are cross tallying. One has to understand that any mismatch between your audit report and this particular return will lead to a 143(1) giving you an addition, because the AI is going to process it. There's not going to be any human intervention, and rectifying the time limit is so short that by the time this 143(1) comes and you try to do, there'll be no time to even file a rectification return. Coming to schedule J, corpus donation. Corpus donation, whether it can be taxed or not, is a question in itself. It's a debatable issue. However, the government is hell-bent on saying that corpus donation is taxable. From 2021-22 onwards, they've brought in the condition that the corpus donation is exempt only if it is invested in the manner provided under section 11(5). They want a complete reconciliation of the corpus donation. Sir has already dwelt on how you need to bifurcate the corpus donation into 3 parts and fill it up over here. There's a specific question on corpus donation which we are going to deal with in the question and answer session. However, any corpus donation figure which you fill up over here has to also cross tally with schedule R. We'll be dealing with it. The auditor is supposed to certify this in form 10B. So there is a corpus schedule in 10B which is same as this. So you practically certify the entire schedule in form 10B, and the same has to be brought in over here. Schedule J, loan borrowings. This is similar to your schedule LB in form 10B. If you've taken loan, first of all, charitable trust in Mumbai or in Maharashtra and Gujarat, they require specific permission from Charity Commissioner before they take a loan. And violation of that can lead to taking away of section 11 benefits. So therefore, before you fill up loan figures in this, please check whether the Charity Commissioner permission is taken or not. Then coming to schedule JB, this gives details about investments made out of corpus donations in modes provided in section 11(5). You need to fill up this detail. This has to match with your schedule of corpus donation. If you've not invested, the amount, differential amount, becomes taxable. So one needs to be very careful. The other areas are self-explanatory. If you've not invested in investment in any concern in which 13(3) related party. So if you fill up anything in this schedule C, you are likely to face a scrutiny and a problem. Other investments which are not as per 11(5), you are allowed to hold investments in forms other than 11(5) for 1 year as per 13(1)(d). So therefore, but however, the income from that investment will not be allowed for exemption under 13(1)(d). Schedule J, donations in kind. This also needs to be given in detail. Your 10BD also has a donation in kinds. Sir has already said it. I'll just repeat it. There is no ATG deduction for donation in kind. Even if you have a 10BE certificate because you have filled up 10BD, that deduction under section ATG is not available to you. You are allowed to hold these donation in kind for 1 year in modes other than section 11(5) as per 13(1)(d). Balance sheet, I'll not spend my time over discussing the balance sheet. You need to. This is a new entrant. Schedule R is introduced for the first time. They want a reconciliation of corpus donation, its use, and investments made therein. So the new schedule is introduced from this year. It requires you to the balance sheet total and schedule J reconciliation is provided. So whatever you have used the particular asset, if you put, it is not allowed to be claimed as application in the year of expenditure. However, they need details in this particular fashion for control purposes. This is a schedule AI for the incomes which you have earned. As I said, rent earned by the trust is to be entered over here, not in schedule from house property. Similarly, income from other sources are to be entered in these columns, not in income from other sources. Please do not, it'll lead to double additions because the AI does not understand and it'll add the same amount twice. Application of income. As the example which I have given you is already there. 10B, you have a more detailed one where you give information whether the application is in electronic mode or in cash. You further give bifurcation of revenue and capital expenditure. You also need to understand that application which cannot be specifically, these are administrative expenditure. If you fill up very big figures in this, I think it is calling for a red flag. You should bifurcate into the objects. This is only for administrative expenses, as I understand. And one needs to be very careful while filling up this. You are certifying this in your 10B. So please be very careful. You yourself are certifying whether this is for relief of poor. Now, it is understandable where there is gray area and you make a mistake, but a blatant mistake would amount to dereliction of duty. Expenses not allowed. We have a question on this, so I'll not dwell too much on it. These are the items which are there. Application outside India is already discussed by sir. Application for purposes beyond the objects of the trust. You fill up anything over here, the amount, even if the smallest amount is to be reported over here. And this could lead to problems in registration because you are applying your beyond the objects. Another issue in this is that any donation to trust not register, not having same objects is already discussed. Sorry. Even if you don't have registration to a donation to a unregistered trust is to be disallowed, which is something which they brought in for the first time. Which if they brought not for the first time, which they feel it is not allowable. However, the auditor can have a different view. And if you are taking that different view, please note it in the notes in 10B so that you have made your stand very clear. Voluntary contributions, you bifurcated between corpus and other than corpus. You also need to give details about foreign contribution. This entire thing is certified by you in your 10B. See that the same figures are put over here. Anonymous donation also. In your 10B, you are going a step further in anonymous donation. You are saying that why the anonymous donation is not taxable, and you are bifurcated into 3 parts in anonymous donation in 10B. So you could have a temple trust, or you could have a trust which has joint objects of charitable and religious. And I would forewarn you that today, if you take up the profile of charitable trust, they have removed charitable and religious. So in their profile, you have to select either charitable or religious. They are not allowing you to select charitable religious. Now in 10B, you need to give details of donations received by a religious trust or charitable religious trust, and fill up those figures in 10B of Schedule 11 BBC. And give bifurcation of that. That same figure should tally over here. This is a cross tally of 10B and Schedule VC. Schedule BBI, if you've not spent this is directly coming from your schedule of accumulation, whatever is in that last column would come over here. Similarly, Schedule D figure would automatically get picked up in this second this thing. So therefore, you have these bifurcations. There is, we'll be discussing that basic exemption limit in a question, so I'll not spend my time over it. Just give me 2 minutes, sir, then we'll close it to take the question and answers. Part B, total income. This is the main computation. Every figure over here is directly coming from another schedule. Only figure which you are filling up over here is the 15% limit in this column of 15%, which is there, which you are filling up. Everything else, 6.5 over here. Besides this, all the other figures are coming from your various schedules. This is an indication, this yellow dots and the A, B, C, D, E, F is from 10B. It is also linked to 10B. And this is blue is the indication that it is coming from the schedule. So everything has to cross tally. And the computation will automatically be auto-filled over here once you fill up the schedules. Part B, total income. This is something which we'll be discussing separately. Sir will be taking up separately, so I'll not spend any time over here. This is something new which has been brought in. 1310 has been added from assessment year 20, the current assessment year 23-24, where you have the benefit of taking the receipts minus the expenses directly linked to those particular 1310 items. There is one question on this also in the question and answer. All these figures are also to be certified by you in 10B. The yellow dots would indicate that these are certificates to be issued by you in 10B. So it has to cross tally. Yes, the schedule of BBI. Everything is going on 30%. You do not have the option of slab rates. They've removed it from the return itself. This is the calculation. Now I and sir will take up the question and answers, 23 question and answers, which we are supposed to take up. And time permit, we'll take questions from floor also. I'm sorry to have rushed through this presentation, but there is less time, and these are all items which can be dealt with at leisure by you, looked at. There's nothing ununderstandable over there. I'll share the question slides. Is it okay, sir?
Ashok bhai,
yeah.
After this, we can take few questions from the floor, because there are a few questions which are on the Q&A box also, sir.
Yeah. So what we'll do is we'll take up the question and answers which we have listed. If they don't still get answered, I and sir will take it up. Not an issue.
Please, sir. Please, sir.
Yeah. Sir, can you?
Yes.
Sir, you are sharing it, or you want?
If you can share it, fine.
Yeah,
Otherwise,
I'll just try and share it.
Please.
Just a second. I'll just.
Sure, no problem.
I'm sorry. I'm also equally. And
yeah, here
is it? Yeah.
Yes.
Yeah.
You can make it full screen if you want to. So
yeah. I'll just do it. Sir. Yeah. This is the first question to be taken by sir.
All right. The first question is, what is the significance of the amendment in section 12A1B prescribing books of account to be maintained? That, as I mentioned in my earlier presentation, is that ultimately now the books of account as prescribed is a condition of the registration, which means that if you don't maintain books of account in accordance with Rule 17AA, it will infringe the condition of registration, which could lead to your being denied that particular exemption. To my mind, it's a very, very important thing. And that is how one needs to look at it. So please try and maintain the books of account as is prescribed to the extent that you can. And as I mentioned in my earlier answer, if there are some minor aberrations which do not affect the substance, I would take a view that yes, the condition is not violated. But in that regard, I would then have a proper disclosure in my audit report. Yes, Ashoki, next.
Yes.
Yes. This is an interesting question. In fact, we have one more which is not listed here. Is that if the format of the final accounts is prescribed under any other act, because in Maharashtra, the Bombay Public Trust Act or Maharashtra Public Trust Act, as they call it, prescribes a particular format, whether any qualification or comment is required by the auditor. To my mind, as long as, because those are financial statements, as long as the books of account are maintained in accordance with 17AA, and the information called for in 10B is capable of being culled out, then no particular qualification is necessary. The only, because it had come to me around a week ago, is that if by any chance there are two auditors, separate auditors appointed, one for conducting an audit under a different statute, that is the Maharashtra Public Trust Act, and one doing an audit under 10B, what should we one do? Now, if you look to the old 3CA or the 3CA as it stands, there is a clear proposition where you can rely on in the form itself, that you can rely on the work of another auditor. I would take a view here also that if the audit is conducted by under a different statute by another chartered accountant, for example, this is MPT. Suppose you have an auditor who is auditing a Section 8 company, then you are, to my mind, entitled to rely on his report. And at least as far as true and fair view is concerned, with the proper disclosure that for true and fair view, you have relied on his audit report, that should be sufficient compliance. But the only conditionality is that if it is other than a Section 8 company, the audit under that statute is done by a chartered accountant, because you are entitled to rely on the work of a chartered accountant. In the odd case that those statutes permit audit by a different professional who is not a chartered accountant, then possibly one will have to conduct the audit itself. Though I normally advise trust that the auditor should be common, but in case that has already transpired, then this is the way to deal with it. Yes, next.
I think, sir, institute guidelines also prescribe that how to rely on the work on the joint auditor, sir.
Yes, yes. Institute
And that will,
also.
yes, that will be helpful, sir.
Yes, yes.
Yeah, AS 600.
Correct, AS 600.
Yes, sir.
Or SA 600.
Yeah, sorry, sorry. SA 600. I'm sorry.
Okay. No. I just question. This is important. Is that here is a question where you are trying to satisfy the mandate of separate books of account. And the question is that in case of accounts maintained in an ERP system, would test of separate cost centers availability satisfy the test of separate books of account? Now, ordinarily, the object of a separate book of account would be to garner or to be able to compute the distinct income in the form of revenue and expenditure relating to that activity. So the first blush view would be that in such a situation, if from the books of account as maintained, you are able to cull out the income of that activity, there are a number of tribunal rulings also in that genre, taking a view that yes, that is compliance with 11.4a. However, I must bring to the notice of the participants here that there is a direct Bombay High Court ruling in the case of India Machine Tools Manufacturers Association, which is 91taxman.com 465, where they have taken a view that separate books of account have to be given their true meaning, which would mean distinct and separate from the books of account of the other charitable activity. They have undoubtedly taken a strict view, but that is a view, and it is a view of a jurisdictional high court in Maharashtra. So please be careful. I normally advise people कि जिसको Tally 9 में अलग company करना बोलते हैं, तो have a separate company rather than relying only merely on cost centers. That is my view. So then it satisfies separate books of account perfectly. Otherwise, there could be some danger. Yes.
Because maximum firm जो है वो tally में books of account maintain
हाँ
करती है
हाँ
sir.
तो टैली में अलग कंपनी तो खोल ही सकते हैं ना तो
हाँ.
in that same so because the High Court, I read the High Court ruling, it is they are saying how do you give meaning to the word separate? So it has to be distinct from your other books of account. Tough view to take, but they have taken it, and it's a jurisdictional High Court as far as we in Maharashtra is concerned. Yes, Ashok ji, next. Yeah, okay, mine only. Okay. What address should one report in clause 14 for the books of account and documents maintained on cloud? This is a real problem in case of certain large entities who are maintaining their books on cloud. Obviously, the object of the recording as to where the books of account are maintained in clause 14 of the audit report is to provide accessibility to such books of account for the authorities. So to my mind, merely mentioning that they are maintaining on cloud may not be sufficient compliance. I have suggested to clients that you should have a system of a daily backup taken on a daily basis, because the books of account in 17AA can be maintained in digital format and printouts thereof. So we have suggested that in such a scenario, you please have a daily backup, and at the end, when the accounts are finalized, have a final printout for the purpose of verification of the jurisdictional authorities. So that would be, to my mind, compliance. Next question.
Sir,
Yes.
in this, just a clarification. Is the printouts also required to be maintained, or online it is? If
No,
it is
to my mind, backup is sufficient. Online on a regular basis, if you are maintaining, I don't see why you should have a daily printout. But a backup should be available at your place to for that person to access. Because I look at it this way, that the object is that अगर officer आपके पास आया, तो आपके system पे he should be able to peruse the books at least a day prior. So that is what I look at. The whole objective of 14 is where are books of account maintained, register office or anywhere. So if it is only cloud, to what extent, and then also the difficulty of the cloud server being located at a situation outside India would also be of some, though of course the law does not mandate that it has to be maintained only in physical form. But we have, on a consideration on everything, taken a view that you have a daily backup situation and then you are fully compliant.
Sir, similar issue was also there in the 3 series, sir, because in the 3 series also asked that maintenance of the books of account, and I have seen many speakers have suggested that you mentioned the cloud ID also.
But cloud ID, sir, then how far it will satisfy? See, I always look at it this way. We are dealing with a regulation which deals with charitable trust. So I would look at compliance in form and substance both. Yes, technically speaking, maintained on cloud is not impermissible. But I would still insist that because you look at a scenario today of your maintenance of books of account for the purposes of your new audit report under CARO or whatever they call it. There also this issue had come to us for opinion, and we have taken a similar view that yes, you maintain a backup on a regular basis. So that's how there could be two views. I'm not denying that, but
okay.
Yes, Ashok ji. Next, cash system.
Cash system, where the trust is following cash system accounting. So, with regard to companies, Section 8 companies which are carrying on scheduled charitable activities, company law provides that you compulsorily have to maintain the mercantile system of accounting, and therefore if a cash system is maintained, you need to qualify the report and say that it is not as per that particular law. However, if you are a charitable trust which is not Section 8 company and the law of that particular state does not require you to maintain the accounts on mercantile system basis, so you could have if you are registered as a society in UP as a charitable trust, the UP law, if it requires mercantile system, then you need to follow it. If nothing is mentioned, you can follow cash system and no qualification is required in this case. Cash system with the current law saying that you will be allowed only when you pay the amount would reduce friction and keeping reconciliations. So a cash system is something which is now likely to be very favorable. However, one should be very careful of the local provisions in the charity commissioner law or the local law which you are registered with. Companies, of course, you have to qualify if you are not following mercantile system. In other cases, you need not qualify if the law under which you are governed does not provide for that. Sir, you want to add something to this?
No. What you have said is fine. If I remember rightly, in the good old days when we were dealing with the tax audit, when it initially came in, there used to be some, note which was suggested by the institute in regard to true and fair view in a cash system. While we are speaking, I just recalled. If it comes to light, I think I will be able to, I must keep it in my record somewhere. I think that one of the institute publications suggested a particular note, because we had a big dispute with, I remember the Venerable Jal Dastur. And the situation was, the question was, can there be a true and fair view of in a cash method? And I said that ultimately, it's a situation where if you are maintaining books of account for donkey's years on that basis, then except for certain very, very rare situations where suppose you are a trading organization, then maybe a cash system where no stock is reported would be incongruous. But otherwise, cash system by itself ought not to vitiate true and fair view. In fact, that time we were dealing with the old 209 of the Companies Act. And we took a view that, yes, if it is mentioned on cash basis, you would qualify. But even after qualification, what would happen? And we don't have time, but it was a big discussion. I remember discussing with Mr. Jal Dastur and his brother, Mr. Soli Dastur, when he was at one of our conferences. Anyway, what you have said is quite fine. No issue.
Okay. So, in case of societies having thousands of members, how is it possible to give details in clause 10 of members of the society? So there is no bifurcation given whether only managing committee members are to be given or the term used is members of the society in that particular clause 10. So a literal meaning would mean that you need to mention the details of each and every member. Now, life could be very difficult, say, supposing Bombay Chartered Accountants Society or Chamber of Tax Consultants, where you have 4,000 members. Does it mean that I need to give the details of PAN, Aadhaar, address of each of those members? Now, that would be a very difficult thing to fathom, and a more logical view or more practical view would be that you say that the managing council or the managing committee of the society, their names, address, and PAN numbers are given. You suitably put a note in your Form 10B certificate on the first page saying that in this clause 10, we've taken this particular view that we have taken though we have the members list available with us, we've put only the names of the managing committee or the managing council's view.
Just to supplement, what you said is absolutely right. What view we have taken is that you read those lines in that particular clause as existem generis. When they're talking of members of the society, if you see that what is falling in actually 13 is authors, founders, etc. Now, in a society which is registered under the Societies Registration Act, initially there are 7 members who subscribe to that memorandum. They are virtually in the status of authors. We have taken a view in our office that it is those members, 7 members who are virtually authors. Their name should be given. And in addition, of course, the managing committee, etc. Though, as you rightly mentioned, a literal reading would require you to give all members. And as you said, 8,000 members in BCA or is an impossibility. The object, to my mind, is that those who are in governance or those who were involved in the inception of the society or the organization which is carrying out a charitable purpose, their name should be given. And as you rightly mentioned, qualify or disclose that by way of a note in your interpretation. And I think that should suffice.
I also think, sir, because giving the list of the whole member will not serve any purpose, sir.
Yes, sir. Next is
Because-
mine or
Yeah.
Yeah.
okay. This is an interesting question. If the auditee takes a view that an amendment to the memorandum or constitution does not constitute amendment of objects which do not conform to the conditions of registration, but is an amendment to the powers, is a reporting under clause 12 required? This is $1 million question. At first blush, one would say that if you have made an amendment, then why not apply or why not go? But if you strictly read the law, they say changing or amendment to the object which do not conform to the conditions of registration. Now, for example, I'll say that suppose you are carrying on, you are having educational objects. You are an entity formed in 2000 or maybe 1945, at which time computer education was not there. You merely added computer education to your clauses. Is that an amendment to objects which does not conform to the registration? I would not think so. Similarly, there is an amendment to the powers and the regulations. For example, in those good old days, the secretary could sign only up to vouchers up to 2,000 rupees. Now you have increased that by 2 lakh to 20,000 rupees. That is an amendment to powers. And similarly, there could be a situation where an amendment to the regulations, saying that instead of the meeting held every 3 months, it is now required to be 2 months and things of that sort. So an amendment to the powers and regulations, to my mind, does not require a disclosure. If there is an amendment to the objects, then you have to be careful. Then you have to make a judgment as to whether the amendment is such that does not conform to the original conditions of registration. There I would suggest that people should be careful and ensure that there is application for a fresh registration. If they are wanting to take the aggressive view and say that no, the amendment is such that it is virtually retaining the same objects, then they may qualify saying that in their objects, this is the proposition that they are relying on. Next question.
Yeah. Sir, this thing,
yeah.
but it will be a very dangerous view to take if there is a change of object, because the law does not give you support.
No, I appreciate it. It says does not conform. CONFORM, conform to the conditions of registration.
Yeah.
And in fact, I'll share with you, we took that stand in BCCI's case. We argued that with Percy, and we argued this ground that the amendments to the objects are such, forget what otherwise there is in BCCI, different matter altogether. But what was the amendment? The amendment was that we should be able to hold women's cricket and 2020 games. Now, we argued that when the registration was taken, at that time, it is still a game of cricket. 2020 was not there at all. So if we include that, does it mean that we vitiate the objects? Similarly, at that point of time, women never played cricket. So we argued that, and we got a finding from Ramat Kumar saying that, yes, this is an amendment that does not vitiate or is not an amendment that does not conform to the condition of original registration. So needs to be well argued, and I agree with you that charitable trust is the last place that one would litigate. If there is a change in object, by all means, make an amendment, no issue. But if that exemption is or that registration is denied to you, and you believe that you have a case, take this as a ground even before the tribunal. All right.
Yeah.
What is the meaning of project or institution clauses 14, 15, and 16? Now, here, some of my people who came to me for references, they said, if you don't have a project or institution, no reporting is required, because that basically requires you to declare all. I have a slightly different proposition here. I would take a view that if you are carrying on a single activity, then that activity is your project. It may not be a separate institution. So to my mind, ultimately, what you are required to disclose in that particular situation is that the mere fact that you don't run an institution would not lead you to a conclusion that no reporting here is required. Of course, I am aware that this is a conservative view. A view on the other side is possible. But I at least would take such a view that no, here, whatever your expenditure is, you need to report. But as I said, two views possible here. Yes, Ashokji.
Yeah. So for the purpose of reporting in clause 18, in determining whether an activity is a business, should one apply the test laid down by the Supreme Court in the case of order, even if the activity is not that of advancement of purpose of general utility? So basically, this question tries to tell you that will order apply to the other clauses of relief for poor, medical, and the other clauses? That is the question per se. According to me, order is restricted to the interpretation of proviso to section 215. And the fact that the proviso restricts itself to the last clause of general public utility, the order judgment cannot be interpolated to say that for all activities, this business clause would apply. However, whether whether the department will accept this view is something which is the department is very happy with the judgment. They even wanted to, they've even gone and asked for a clarification with whether regard to whether they can reopen the old cases, and the Supreme Court has said no. This is something which is going to be a lot of litigation. But according to me, to the other clauses like yoga, for medical, for relief for poor, all those clauses, order judgment would not apply. The principle that just because you are having high margin and there is cross subsidy, so supposing you have a hospital where you have poor patients being treated in general ward free of cost, and you have first class where you got very high charging, does it mean that because they are doing and the activity leads to more than 20% of very high charging, does it mean that they lose section 11? According to me, that logic of order is restricted to general public utility and not to other limbs of section 215. However, department is likely to take a view which is going to lead to a lot of litigation. Sir, would you like to add something?
Yeah, I would concur with you, except for one small observation.
Yeah.
Because order was primarily on interpreting the proviso. Having said that, if you look at 215 also, 215 is a charitable purpose which includes. Now, if you are carrying out an activity which is blatantly commercial, even in the first part of it, then order may not apply. But would you still be charitable even without the wires or the contours of the proviso? For example, you are carrying out education, and I'm not talking of cross subsidization, that I fully support. But suppose your cost is X and you are charging 10X. Would such a charge where year on year you earn huge profits, would that still remain charitable? I have my own doubts. So therefore, yes, the onus on proving that it is non-charitable in the first 5-6 limbs of section 250 is far greater. And I concur that for order applies only to GPU, does not apply to others. But I would not say that if the activity is blatantly commercial, you would still succeed on this technical defense. So that's what I am coming from.
Yeah,
anyway,
there is a Delhi High Court judgment, sir, with regard to Delhi Public School, or I forgot the name, where there was a huge profit and very high fees were charged, and the court has held that this is not charitable, though it was an education, formal education. The limb would not have applied. I really don't. They have held that it is not charitable.
Sir, my view is that if aura cannot be said that it will if there's a commercial activity in the per se charitable activity, then it will not be applied here. Aura cannot protect us, saying that for the education there is no commercial activity.
Yeah. In clause 19. So if you take up in 10B, there is a clause 19 which asks for details of TDS deducted from receipts of the trust have to be given only in case of TDS on contractors, professional fees, commission or brokerage of sale of goods. Does this mean that such details do not have to be given in case of trust not carrying out business? I do not think so. So if you read clause 19, that clause nowhere refers to whether you are carrying on business or not. So the first, so 17 and 18 talk about business. Before that, 16 talks about whether you are carrying on commercial activity in violation of 215 and you give your opinion with regard to that. However, 16, 17, 18 are different clauses. Clause 19 per se, if you read it, it only requires you to give details of TDS deducted on receipts in the table given. To interpret it in the manner that just because you are, according to the auditor, not carrying on business and therefore I'll not fill up this detail is an incorrect view in my view. The details have to be given whether you are carrying on business or not. So it is possible that you have got sponsorships from a company. That sponsorship company has, out of abundant caution, deducted TDS. You are not covered as a business. That sponsorship also is a very small portion of that 20%. So you're actually not carrying on business. But do I need to give detail of that TDS deducted in that table? The answer is yes. Whether I do business or don't do business is a separate in 16, 17, 18. 19 only seeks information with regard to TDS deducted on receipts. It only tries to caution you that look at all this before you say that they are not doing business. So section 19 only goes further to find out whether you're doing business or not. But whether you do business or not, details have to be given in clause 19. Sir, would you like to add something? Yeah. So I think that explains this question. Yeah. Anil, sir?
Purpose of this particular question, the issue is that you are required to, as of now at least, upload this audit report by 30th September, while the due date of return is 31st October. And 13th says that if 13.8 applies or the other clauses of 12A, 1B or BA apply, what would be the position? According to us, in our office, we have said that you take the computation as certified by the auditee and a declaration that he would be furnishing the return of income on this basis and rely on it. There would be certain eventualities which occur after your reporting, but that does not mean that you don't report. I think that is sufficient for your compliance as far as you are concerned. You are protected. If the auditee for that time makes a different computation later in point of time, you have relied on that particular declaration and the signed computation. That is sufficient. Next. If the trust has already reported donations in kind or donations in cash exceeding rupees 2,000 in Form 10BD, is there a need to report such donations again? My take on this particular clauses is that they are ultimately attempting to reconcile your aggregate donations credited to your income expenditure account with the entire 10BD and what is not reported in 10B. If you have reported at one place, I don't think you need to report. And as Ashokji in number of his clarification said that if you do so and your list total does not tally, then they will go to a situation that these donations have not been included in your income expenditure account. So to my mind, the whole objective of those clauses is to ensure that your income expenditure account or your books of account fully reconciled with 10BD and nothing more. So that is how I think we go on.
But even if I have a 10 BE, if I've paid in cash, I cannot claim.
Yeah, obviously, I think that is clear. The objective of those clauses is only to reconcile, nothing else. So, prefer nahi padta.
Yeah.
13.
13. How is it possible under clause 25 and schedule FC for an auditor to verify whether each contribution is a foreign contribution or not, when there are thousands of lakhs of donation and give the effect give the fact that no trust would ever have copies of passport of all donors. This is a genuine difficulty. So even when you are certifying before this form 10B, before this clause 25, you were not having these passport copies. So basically what happens is, if there is a foreigner who does not have an Indian passport, he gives contribution to a trust, that becomes an foreign contribution. Now that foreign contribution cannot be received unless you have registration under FCRA and you are received it in the SBI account. So you're not allowed to receive it unless you have a registration under FCRA. Now, it is possible that the trust has received some donation from a person who has a passport which is not, he's not an Indian. So there are a lot of citizens of who have passports of UK, USA, and all other countries who are living in India for a very long time. They donate to a trust. Those donations would be treated as FCRA. But how the hell with the auditor, or that for that reason, even the trustees know that this donation from the account is an FCRA. You only can take a declaration or an MR saying that the trustees have taken due care and not accepted any FCRA in violation of the FCRA rule, and put a note. So put it in your MR, and that is all. I don't think there is any solution to that. Nobody will even, so even in larger trusts, they don't even give you the PAN. So I'm part of a very huge trust which has 7 crores of donation, majority of it in check or cash or whatever. They just come and give you the check. If you ask them for a PAN number, they do not give you. If they ask them for an Aadhaar number, they do not give you. Does that become an anonymous donation? No. If he's ready to give you the name and address, it is there. Passport is the last thing he's ever going to give you. So I think an MR that the trustees have taken due care to see that they've not violated foreign contribution should suffice. Sir, would you like to add something over here? It's a difficult one.
I think it is fine. You can't, answer that at all. There is no way. Okay, next.
Yeah.
Yours only.
Yeah. Is a donation to a trust exempt under or to a trust not registered under 12A required to be reported in clause 3113, which is the provision in law to disallow such application of income as indicated in the audit report. Now, the audit report under 3113 requires you to report donations to a trust which is not exempt. As an auditor, do you have a choice not to report? The answer is no. If you feel that something is not to be reported over here because the law does not provide for this disallowance, it's a very risky view to take as an auditor. I would not advise it, but if you have to take that view, please make a proper declaration in the main clause where you say that it is true and correct, that I have relied on this understanding of the law and therefore I have not mentioned that under 13.113. There is no provision of law which requires this application of income to be disallowed. However, the form and the utility today has been made in such a manner that any amount reported over here will be disallowed. Now, the auditor is taking a great risk by not reporting over here in spite of the fact that they require reporting. However, he can rely on the fact that and put a note to that effect in the main audit report saying that I am taking this view where the donation is, and I have seen that this is not to be included in this particular clause because of these views. Yes, sir.
I entirely concur with you. I think this is virtually like the form overruling the propositions of the law. There is no reason where a donation to another trust, so and so or trust not registered in 12A is required to be reported. And I do also concur with you that yes, one has to be extremely careful. And I don't want to frighten the participants, but my experience tells me that the most of the disciplinary cases at the institute are in regard to charitable trust or cooperative societies. Forget NAFRA or anything, because what we people tend to forget is that your responsibility in a charitable trust is far more onerous. when you audit a company, sir, you are responsible only to the shareholders, or if there is a public borrowing to that institution. Here, virtually the members of the public are interested. You're responsible to each and every one of them. So your onus is far more. So I always tell people that in a trust, be 10 times careful, but people don't. And I have had numerous cases where people say that, look, हमें तो fee 2000 रुपए मिलती है तो कौन करेगा? That I think people should not do. If they feel that 2000 rupees is not enough or not proper, they should stop doing work. वो ओनली मतलब आग की शर्म के लिए आप किसी की बैलेंस शीट साइन करना मेरे अंदाज में बिल्कुल गलत है, और उसके बहुत सीरियस परिणाम हो सकते हैं. So again, I did not want to frighten people, but that's reality. If you look at the statistics, 30% of cases are like this.
I totally agree with you, sir. When I was talking to some senior person from the institute. They have told that many complaints are from the charitable organization only.
Mm-hmm. Anyway, question 15. This is what will make me unpopular, but this is what I truly believe, is that the question is that if you accumulate more, or for example, your 11(1)(a) accumulation still results in something like an amount less than 250,000 being remaining as income, which is unspent. Does it attract a tax? To me, the answer is yes, it does. People call it unfair that you are treating an AOP which is normally getting a 250,000 exemption, and to a charitable trust you are denying that. Let me for a minute point out that section 11 is beginning with the mandate that income derived from property applied to the extent that accumulation is permissible to 15% and then 11(2). Something that is not there or is not applied does not automatically enjoy exemption. What could be the defense to this? I do concur that yes, to small trust में बहुत उस पे ऊपर बहस हुई यहाँ हमारे ऑफिस में भी कि छोटे ट्रस्ट का क्या. मैंने कहा देखो ऐसा है कि अगर आपको 1 लाख रुपीज आफ्टर 11(1)(a) बचा तो 1 lakh you have not spent. So in addition to 11(1)(a) you want to enjoy 1 lakh rupees without fetter. That does not seem to be the mandate of the section. Secondly, a charitable trust can be formed either as a society or an AOP or maybe a company. A company never had threshold limits. So the threshold limit in the hands of the AOP, to my mind, would create inequity there. The only defense that you can have is that this virtually renders 164(2) OTOs. 164(2) proviso says that in certain situations you are taxed at MMR. This is also charging you at MMR. I would take a view that 115 BBI overrides the general provisions. I know I'm in my office also, I'm very unpopular for taking this stand, but I believe that yes. And the recommendation that I have done to all trusts in a scenario like this is that if there is something remaining, you please accumulate for a period of 5 years. 11(2) is available to you. You return income as nil. And I think that should clearly help you. And in that scenario, you would get out. And if you can't spend within a period of 5 years, whatever remains below 250,000, then I'm sorry, then you deserve to pay tax. That's what the proposition is. Anyway, this is my take. Unless Ashokji wants to supplement me on this.
No, sir, I have the same view, sir.
Okay.
I don't.
Question 16. Up here, sir.
Yeah, under clause 39C(4), are amounts given to needy individuals by way of relief for poverty, education, medical assistance required to be reported. Now, 39 talks about 1310. Okay, so 1310 specifically requires that any donation given for the purpose of if you look at 39, one sec, I'll just read what is the clause. So for the clarity, because this is a new form, maybe some people have missed out. So 3910 is a clause which is giving you the working of 1310 income. You are certifying the 1310 income. One of the clauses says that expenditure in the form of contribution or donation to any person. So it might happen that you are doing medical relief and you are donating that amount to a person who needs that particular medical instead of actually giving him medicines or something. So do I need to report? Technically, this form requires that you report this. 1310 also specifically requires you to report it because the intention of giving exemption under working of 1310 is only expenses for the objects of the trust should be allowed as expenditure of objects of the trust. Look at a situation where you can easily escape this by giving donation to another trust or another person who might not use that funds and which is not going to be traced out. So I think one needs to the intention is that you cannot get a deduction for this and one needs to report it. I would know that there can be a different view and people have said that you need not report it. However, if you are not reporting, it's a very risky proposition. I would say that I would request that you put a note to that effect and make your stand very clear about this. Yes, sir. Would you like
yes,
to add?
yes, no. You're right, absolutely. Question 17, yeah, aapki hai.
Yeah, sorry. Under clause 41, in case of substantial
Yeah, you
contribution,
mentioned that.
what
Yes,
is
okay. Yeah.
the amount required to in the column 6 amount of donation received during the year or aggregate donation received till the end of the year from inception to, I think we've discussed this.
Yes.
You are only current year's donation is to be considered and there is this circular 143 which is in favor of and helping the auditor. So you can use this. We have very less time. So
Sure.
yeah.
Yes, sir.
Question 18, yeah, yours. 41.
Yeah. Clause 41 is giving PAN and Aadhaar of every specified person mandatory. Yes, it is required. You will not be able to upload the utility. The return does not get filed if you don't have the PAN or Aadhaar. So this is compulsory. It is required. I don't see why there is a case where you could be an NRI, but then there is a separate column for people. If you are non-resident, you can alternatively fill up the passport number or some other identification. There are 4 options given. You could use any of those items, but PAN and Aadhaar, according to me, is mandatory. Otherwise, the utility will not allow you to go ahead.
All right. Next, this I think we partially did answer, but the proposition that Ashokji also made was that, look, whatever your expenditure is may be undoubtedly charitable, and let us assume that it is. But one must appreciate that the mandate of the settlor of the trust is for the trustees to act in accordance with the objects as they stand. Any small amount that he spends stepping outside those objects, he violates the mandate of the settler. And if he violates that mandate, then that expenditure certainly cannot be allowed because it is not application for objects as mandated by the settler. That's the long and short of it. However small, 1000 रुपए भी आपके ऑब्जेक्ट्स में अगर नहीं बैठता है तो आपको पावर ही नहीं है. You have no power to do, as they call in the Companies Act, ultra wires. आपके पावर में नहीं बैठता है तो then obviously you have spent something without your mandate. It cannot be allowed. That's the inescapable conclusion. Question 20, yours, sir.
Yeah. Under clause 43F and schedule other laws violation should reporting of non-compliance with any requirement of any other law. So this requirement is only if there is a material violation for the attainment of its object. So if it is not very material, the law is not material for attainment of the object, this need not be reported. So there is one example is that there is common in Maharashtra and where there is charity commissioner law or there is a society law. You have not complied with some minor compliance issues. You've not filed the change reports in Maharashtra, or you've not in society, you've not reported the annual budget, which you are required to do in UP and some parts of Delhi societies. This is a minor violation which is not requirement materially to the attainment of objects of the trust. These need not affect the trust reporting, and it should not be reported in 43F. You have to understand, as an auditor, if you report something in 43F, it will become it will immediately lead to cancellation of the registration of the trust. Whatever the trust might argue with the commissioner is saying that your auditor is certifying that this is material, and therefore he will what you call cancel your registration. So one has to be very careful what you report over here. Yes, only if the requirement of the law is material to the attainment of the object, report it over here. Minor violations need not be reported. What you can do is you can say that you've taken this stand in the main notes to audit in the main report, where you certify this is true and correct. So would you like to add something?
No, fine.
Yeah.
21, yeah, whatever, okay.
Yeah, reporting requirements under clause 44 if an asset has been acquired out of accumulation. So clause 44 talks about 11.6, where you have to claim depreciation is not allowed if you claim the entire asset as a deduction. Now, if you claimed entire asset as a deduction, depreciation is not allowed. What the question tries to say is, supposing I have used the accumulation under 11.2, can I claim again depreciation on it? According to me, no. 11.2 is also an application of the funds which you have accumulated over the period of time. I don't see it will be double deduction. The intention of the law is not there. Even if you get away for some time, the law will come down heavily on you and lead to litigation. You cannot claim it. Similarly, acquired out of donation, I don't think they should, you will be allowed depreciation. My view is that you cannot claim depreciation. It is again an application of funds, and there is double thing. So if you've taken out of corpus donation, when you refurbish the corpus donation over a period of 5 years, you again get application. So therefore, to then claim depreciation over it is taking double benefit. The law is not for that. I think it's a violation of the law. Sir, would you have a different view?
No, very clear. See, again, at the cost of repetition, I must say is that you are applying income in the first instance. When you are permitted an accumulation under section 11.2, when you apply that over a period of 5 years, that is again application. So you claim a application at stage 1. Once you do that, the claim of depreciation does not lie. I'm very clear on this. As far as corpus donation is concerned, your case is even worse, because corpus donation by its very definition is not income in the first instance. If it is not income in the first instance, then if you utilize it for acquisition of an asset, obviously you cannot claim depreciation on it, because again, the whole mechanism of 11 to 13 is application of income at one point of time. That's the long and short of it. So that is how you go about it. And I think once you get that into your mind, all these, situations of 15% standard deduction will go out of your mind. So that's how it is.
Yeah. Clause
Question
45.
22.
Yeah. Clause 45 talks about 11.7. That if you are claiming section 11 and 12 deduction, you are not allowed to claim deductions under 10 section 10 exemptions. So therefore, when you are finalizing, the trust has not finalized the return. Sir has already dealt with it. You could take a certified computation and rely on it. That is the only precaution which needs to be taken.
Yes.
All right. The last question. This is a little complex, but at the same time, let me make it clear. Is like this, that section 11 talks of application of income for purposes in India. Now, the question is, does the word in India attach to purposes, or does it allow attach with application? I would clearly take a view that it applies with the purposes being Indian. So therefore, for example, suppose you are in the activity of healthcare and you import equipment from outside India to help your patients in India. Obviously, you would be remitting outside India. Is that application outside India? The answer is no. Take a second case, which is slightly on the gray side, but still arguable, is that all right? As the question given here is, a foreign music teacher paid for teaching music students in India. Who stands to benefit? The students in India stand to benefit. So the purpose is Indian. The nexus is with India. And therefore, even if there is a remittance of money outside India, I don't think it matters. However, if there is a scenario where you spend which results predominantly in a benefit to entities or citizens outside India, then the purposes are also outside India. So I gave very rough examples, but this is what I would look at. And for those who are keen on judicial pronouncements, two decisions you rely on: Gem and Jewelry Export Promotion Council, which is 68 ITD, page 95, and the CO Club India, which is 25taxman.com 217. Both tribunal rulings, taking the view that I took, and I think that is the proper view to take. You must show a dominant connection with India. If you don't show that, then of course, and if your entire expenditure is structured to benefit people outside India, entities outside India, then the purposes themselves do not remain Indian. I think that is what I would look at. And that is how I interpret the phrase application for purposes in India. That's it.
I totally agree with you, sir.
Yeah.
So I think we have just crossed 7:30. Any questions? Can take 2, 3.
Ashok bhai, may I request to just run through the Q&A box here and just find out.
Yeah, so there are some in the chat box also. So one sec, I'll just take the Q&A ones first. So Mr. R.S. Sanghi, how to show income earned from sale of mutual funds? Trust has invested in mutual funds and during the year the same is sold. Sir, you will address it or I should address?
No, you address it. No,
yeah. So income earned from mutual funds, I'm assuming that these mutual funds are as per 11.5, this thing. It's a asset which you have sold. 11.1A, if you have sold the investment or an asset, moving or immovable, you can take benefit of 11A. Whatever is the benefit, you have to apply to buy another asset, or you can also, there is a view that fixed deposits are also assets, and therefore if you put that into fixed deposits, there are decisions in favor and you can claim the benefit of it. I'm understanding that this is covered under 11.5A. Now, if it is not covered by 11.5A and it's a mutual fund which is in violation of 11.5A, this particular income is taxable at 30% because you are violating 13.1C, and therefore 115BB I would apply, and you will have to pay tax at 13%. Is it correct, sir?
It is correct. There is one view on the other side which we had argued at some point of time. See, they are talking of a capital asset. The question is now an investment which you make on a day-to-day basis, is it a capital asset for the purposes of the trust, or is it investment simpliciter? Now, if one takes a view that it is investment simpliciter, then only the accretion, because what happens is that when you look at a capital asset definition or capital asset as a phrase in the context of 11, you would have claimed the acquisition of that capital asset as an application. And then what you said is correct, 11.1A follows. But take a case where you have not done that. You have merely invested that in modes permitted under 11.5. You have not treated the acquisition of those mutual funds as application of income. If that be the case, then to my mind, in that scenario, it is only the surplus that would become chargeable. Though I agree with you that the more conservative view is what you took. Having said that, I just explained the contours of what I'm saying.
Yeah. Thank you.
Next, yeah.
Yeah. Received corpus donation for building capital work in progress with respect to building. Is it allowed as investment under section 11.5? According to me, yes.
Yes.
I don't see any difficulty in that. Is the case of in case the trust is for animal welfare and for classification, was it goes others, then how to resolve it? Animal welfare would fall under other general public utility.
GPU में जाएगा.
GPU में ही जाएगा. I don't see
Yes,
that.
yes, I don't see.
Any...
I think, sir, we will take 3 questions from the chat box
Yes, sir.
and conclude because
Yes, I agree, sir. I
So-
totally agree, sir.
chat box में से how to show income earned from sale of mutual fund trusts is invested during the year and the same is sold. I just explained. If you take Ashokji's view, which I don't deny is the more conservative view to take, but the other view I just explained. Acha, no, we are doing the same thing, is it? Chat में से ही निकाला या?
Sir, there is one question. If trust deed allows spending out of corpus towards objects, can the amount be spent, can be reduced from corpus fund while filing accounts? Charity commissioner format done not allowed so.
Hmm. Hmm.
So how would you reply to that?
नटवर भाई ने काफी complicated question पूछा है, sir.
I will discuss it.
I always answer this to say that you leave something for our offices also.
Yes, yes.
ठीक है, चलो sir. Anyway, take one more question. I think we'll call it a day then.
Yeah. So, for maintenance of books of accounts for a trust, then will significant account policies, etc., will apply while doing audit under Income Tax Act?
Of course they will. Why not?
Why not? Yes. Sir, clause 25 of 10B, foreign question out of total voluntary contribution. Can the assessee apply such foreign contribution outside India? Further, the assessee also required to report the same under FCRA.
Question
FCRA is a different topic.
Ah.
I don't want to question about answer questions right now.
And total foreign question, matlab, is it a foreign tour or what does he want to say? Not clear.
Yeah, it's not clear.
Anyway,
trust-
maybe one more and we'll call it a day now.
Yeah.
Yes.
If the trust is carrying on GPU and business activity as well to the extent it is permitted, whether Form 3CD and Form 10B both is to be filed, assuming the receipt from business is more than the yes, I think it has to be, both have to be filed, but
Yes,
sir,
yes. Once you take a view that the business is incidental, then everything will flow. Then of course 44 AB will apply when those various thresholds will come, etc., etc. Then the surplus the profitability as compared to the turnover, everything will come. I think what we have to understand is that the Form 10B and 44 AB operates in separate fields. For the purposes of 44 AB, once you understand that, or once you accept the proposition that you are carrying on a business, even if that business is incidental to your object, then everything flows accordingly. That is how you will go. If your turnover is less than 10 crores, you may not require to, adopt for the tax audit. But if your profitability is less than 8%, I think still you will have to apply that. Because once you take a view that you are carrying on business or profession, even if it be incidental to your objects, then I think as a corollary, everything flows. That's how we take that view.
yeah, I think we'll end
Yes.
it now.
Yes, yes.
Or you want me to take one more question, sir?
I leave it to Prakashji, whatever he says.
Yes, sir. One or
Okay.
two, just go through, sir. And if required, sir, you can take it, sir. As per your convenience, sir.
If gross receipt of trust are 6 crores and expense for objects of the trust are 4 crores, Form 10B or 10BB, I think 10B has to be filed. Your gross receipts without
Yes.
application has to be looked at.
Correct.
Yeah, sir, inadvertently, the return for a trust was not verified for the assessment year 2023, and later an updated return was filed. What are the repercussions?
I think updated return वो 139 8A में I don't think they will give exemption.
Give exemptions. मिलेगा ही नहीं exemptions.
नहीं.
I have to.
Yes, I think.
I think we'll end it now.
Yes, sir.
Yeah, Prakash ji, if there are any further questions,
Yes, yes, you can send it to us.
send it to us. We'll reply to it.
We'll reply. We will not lose. In the sense, we should not be unfair to participants. But whatever comes in the next 2-3 days, because otherwise we will keep on getting.
No, definitely, sir. It will be our pleasure to accumulate all these questions here, and we will be sent by mail here, and we will request, if possible, just reply it here, and we will also pass on this to the concerned participants from where we have received the questions, sir. With this, it was a very wonderful session, sir. First of all, pardon me for late joining here, and with this, I may request my colleague Harpreet Singh ji, who is the secretary here, to extend the hearty vote of thanks, sir. And I hope that we will be sharing the PPT to all the participants, sir.
Yeah, we've already sent it to you. So
okay, yes.
We don't
thank you, Prakash ji. It was a wonderful session. Thoroughly enjoyed it. Very much interactive. They explained the presentations very well. And then 23 questions in around 40 minutes. It was wonderful listening to them. I am thankful on behalf of CTC to Anil Sathe sir and Ashok Mehta sir for gracing the occasion today. Thank you very much, sir.
Thank you.
Many thanks to you, sir. Sathe sahab, namaskar.
It is always a learning experience where
Yes.
I have for 40 years always believed that you learn every day. You learn something new.
Yes.
Listening to Sathe sahab just like a poem here. That he was so much fluent here.
So interesting, so poetic.
So poetic here that he was everything. He was in the tips here. Nothing to see. That he was recalling the judgment also. That he was recalling what he has done with the other clients. What the opinion that he has given. This is the benefit of the seniors here in the Chamber of Tax Consultants, sir.
Yes, sir.
I'm really obliged to you, sir. Really obliged to Ashok Mehta sir, for Sathe sahab,
it's from the institution, no invitation in my life I have ever refused. So CTC, BCS Institute, though I must say कि institute is not very, shall we say, cooperative in things, but that's how it is. जैसे आज देखिए ना, हमने पहले डिस्कस किया.
Yeah.
I had a pleasure of interacting with Ashok ji. And now because I have nothing to lose in life, मैं WRC members को बोल भी देता हूँ कि आप जिस तरीके से मतलब I've been to WRC a number of occasions. Last 2 occasions when I said I reached there, the lecture was at 2:30. 2:15 I reached. Not a soul to even receive you. कौन है, क्या है, और ऐसे ही आप आइए. You will not believe, Prakash ji, that I started speaking. The person who introduced me, after I started speaking, got off the podium and left. It doesn't make a difference to me. The audience knew me very well. That's a different matter altogether. But I told the WRC members that कुछ respect तो बनता है ना speaker के लिए आप.
बिल्कुल sir, बिल्कुल sir.
Now I have stopped taking institute lectures. लेता हूँ कभी-कभी, but most of BCI chamber तो लेता हूँ मैं always.
No, it was always pleasure to listen you, sir. It was always pleasure. And मैंने मेहता साहब को बोला था कि आप लोग दोनों का जुगलबंदी जो होगा ना सर, it will be top hit, sir.
No, Ashok ji, I must compliment. He is so meticulous.
Yes.
आप देखिए उनका जो comparative chart है ना, वो मैं हमारे juniors को कहा कि आप ये रख लीजिए. It will be useful because the comparison and the fact that he has correlated 10B and ITR 7 is a very good exercise, which is something which क्या है कि वो बहुत मेहनत करने के बाद उन्होंने किया है. So good thing. I think you have an office in somewhere in Kardeo, na?
Yeah. Sir.
Okay. See you sometime.
Yes, sir. Surely.
Okay.
हम तो मेहता साहब को अपना सर सीनियर है, हमारे आइडियल मानता हूँ सर उनको. जब भी कोई जरूरत पड़ती है, we will just inquire. Thank you, sir. So nice to you.
Okay. Right.
Thank you very much.
Thank you, sir. Thank you.